Inflation has been dramatically higher for the past nearly 2 years. And I think we're entering what I call an inflation and scarcity age, and these are really the new reality. So investors are starting to look for alternatives to the traditional investments. And really, silver has been forever nearly a great inflation hedge, helps to lower portfolio risk and increase returns. We'll also look at that in a little more detail. And then I'll get to how and why I see silver as such a great opportunity. So talking about the 60-40 portfolio, this chart shows us how that portfolio has behaved over the last 100 years. And so at the very right on the bottom in that red oval is the returns of the 60-40 portfolio. So it's down approximately 25% or so since the start of this year. Now that's bad. And when you look at the chart, what stood out for me was that the previous periods when these kinds of returns happened in the 60-40 portfolio was in the 30s and early 40s, and then again in the late 60s and 70s. But what struck me was that it didn't just happen on a one-off basis. It tended to happen in clusters. So assuming we have the same kind of returns going forward, I'm not saying that 2023 or even, the odd year over the next decade or so, it would be unlikely if we didn't have some positive years. In fact, I even think 2023 could be positive given how bad 2022 was for the 60-40 portfolio. But the fact that these tend to happen in clusters suggests to me over the next decade, we could certainly be looking at very, very challenging and likely negative returns on balance. Many of the next sort of 8 to 10 years in the 60-40, 60 stocks, 40 bonds portfolio. So a little closer look at silver right now. There was some research recently that was sponsored by the Silver Institute, research done by Oxford Economics. This slide doesn't address the first part, which is that they looked at the last 23 years. It took an average balanced, diversified portfolio and added silver into the mix to see if silver would help with both lowering risk and increasing returns. And it certainly did. In fact, over the last 23 years, it made sense to hold about 5% silver in an average portfolio, a diversified portfolio, which would hold stocks, bonds, emerging markets, stocks and bonds, as well as commodities and gold. And then, so that's very positive for silver. But then Oxford looked at their own models and looked at silver currently, sees it as underpriced relative to gold, and then made their own projections. And what their simulations gave them in terms of output was that they feel over the next 10 years, in fact, rather than 5%, the average portfolio, diversified portfolio, would benefit from having 6% weighting towards silver. So keep in mind, in over these time periods, again, not only did silver help boost returns, but it helped lower risk, meaning basically volatility in the portfolio at the same time. So investors with silver, certain percentage of silver exposure, lowered their risk, lowered the portfolio's volatility, and increased their returns, again, both at the same time. So the takeaways were, as I mentioned, the low correlation of silver helps to lower risk, adds value. But it's interesting to note too, and this is from Oxford, that the average portfolio has just 0.2% exposure to silver. And that is through a basket of commodities. It's not direct exposure to silver. And yet over the last 10 years, their ideal was 5% versus 0.2. And over the next 10 years, their ideal would be 6%. So if you go with 6%, then that means the average investor would need to multiply their silver exposure by 30 times just to reach those optimal levels. So even if the average investor would aim for, say, 2% exposure rather than, say, 6%, they would still need to up their silver exposure by 10 times current levels. So remember, the silver market is very small. It's just 1/10 the size of the gold market. And so it really doesn't take a lot of buying to push the price around. And that really, I think over the next several years, decade even, will help push silver significantly higher. There was also a recent interim report by the Silver Institute, which updated their annual forecast for 2022. And an interesting result of that update was that they boosted their demand, overall demand for silver for 2022 dramatically. And now they think that 2022 will see a 1.2 billion ounce level of demand for silver this year. That is actually up 16% over 2021 levels. That's going to be led by industrial demand and as well silver jewelry and silverware. Industrial demand, they think, will be up 6% to 539 million ounces. So that's basically about half of all silver to industrial. And you have the green transition to solar and to EVs that is certainly leading that charge on the industrial side. Then you have physical investment. They expect physical investment will be up 18% this year to nearly 330 million ounces. That was revised up from their earlier forecast in April of just 50 million ounces. So that's more than 6 times what they saw. And they expect that to be another record this year. The physical market remains very, very tight. Premiums on silver coins, bars, etc., are at, in some cases, or near record highs, and they've been in that position for an extended period. It's all driven in part by inflation fears, lack of faith in government, uncertainties. Certainly, there's lots of geopolitical stresses out there. And so, as I mentioned, silver jewelry will be up considerably this year. They see that up 29% to nearly 40 million ounces. Silverware will be up 72% from last year to 73 million ounces. A lot of this is being driven by demand in India, which was softer last year and the year prior. And with silver prices a bit lower this year, so India has come back in a huge way and is really soaking up tremendous quantities of silver. And so really that's been a big driver this year. Now on the supply side, silver is very much challenged. Although demand is expected to be up 16%, total supply is really only expected to be up 2%. Mine supply will be up, represent 82% of silver supply. And mine supply is only going to be up by 1%. And recycling is expected to be up by 5% this year. However, it represents just 18% of all silver supply annually. So the supply side remains challenged. And what this means, well, if we look back over the last couple of years, we're looking at a huge shift from surpluses to deficits. In 2020, we saw a surplus of 69 million ounces. Last year, we saw a deficit of almost 50 million ounces. And now the Silver Institute expects this year we're going to see a deficit of 194 million ounces. That's a huge 264 million ounce swing from 2020 when we saw a surplus to this year where we're seeing a nearly 200 million ounce shortage. It's a 264 million ounce swing in just 2 years. And the Silver Institute expects that deficits are going to persist as well for the next several years. So what this means is a very bullish setup for silver. As I said, higher demand this year, much higher, 16%. Mine supply only up by 1%, where they had expected originally it would be up by 2%. There's that huge gap. Deficit last year, much bigger deficit this year. And in fact, this year's deficit is going to be 4 times the size of last year's. So all of this, I believe, is likely to help push silver prices considerably higher.